Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Looking at the US, indices tried to gain on what ground was lost last week despite an initial shaky and volatile start from the biotech sector. Apple was the biggest positive mover, adding 1.6% to close on $98.53. The US 500 added 21.88 points to close on 1,926.88. The US Tech 100 added 50 points to close on 4,291.88, and the Wall Street climbed 220 points to close on 16,417. Looking to commodities, gold dropped $11 yesterday, closing on $1,095.80. Oil's dismal start to the new year continued on Monday as prices plummeted fresh lows, dropping $1.70 to close on $31.25 a barrel. Morgan Stanley added to a growing number of voices warning that prices could slide to $20 a barrel. A slowdown in China, whose growth led the rise in global oil demand over the past decade, in recent weeks has added fears of slowing consumption to massive oversupply, even after 70% of the price drop over the past 18 months. While efforts to further weaken China's currency could help shore up its export-focused economy, it would make imports of oil and other dollar-priced commodities more expensive and would be likely to further hit the demand. In Europe, the Germany 30 added 301 points, closing on 9,936.8, and the UK 100 gained 82 points to close on 5,927.3. The UK financial industry has everything to gain, and bankers would be unlikely to flee London if the country withdraws from the European Union, according to one of the campaigns seeking so-called Brexit. The UK's position as a world leader in financial services is not dependent on its membership of the European Union, said Aaron Banks, the group's co-founder. Outside of the EU, we would be better placed to compete with the challenge coming from cities such as Hong Kong and Singapore. The group noted London already topped the annual Zayan survey as the world's top financial capital, outpacing its European rivals, which it said were strangled by EU regulation. The country has the world's fourth largest banking industry, the third largest insurance sector, and second largest fund management sector, Leave.eu said. Overall, finance accounts for about 10% of British gross domestic product, and London also houses 74% of European foreign exchange trading, despite being outside the Eurozone, it said. Such data suggested that there was unlikely to be an exodus of bankers in the UK did Britain choose to quit the EU in the referendum. Prime Minister Dave Cameron has pledged to hold by the end of next year, said the report's author Ewan Stewart. In corporate news, Morrisons shares price soared 10% this morning after posting better than expected Christmas results as it starts to win back customers. Metro Group, the German retail group, posted sales in 3 months to December of 17.1 billion euros. And Asahi Group Holding, Japan's biggest brewer, is weighing a bid for Saab Miller's 2 European brands in a move that could spark a costly global takeover battle. Considering AB InBev, which owns Stella Artois and Corona, is planning to put the Peroni and Grolsch brands up for sale to head off European regulatory concerns over its proposed 71 billion acquisition of Saab Miller. Asahi said on Tuesday that it was studying various capital tie-ups, including the acquisition of the 2 brands. The news sent its shares down as much as 3.4% in Tokyo trading. Other potential buyers include Dutch group Heineken, US-based Molson Coors, and Ireland C&C Group, maker of Bulmers and Magnus Cider. Today's date in focus, at 9:30 in the UK, industrial production is released for November, as well as manufacturing production. At 10:30 in the US, the Fed's Stanley Fisher will speak. At 10:30 in Japan, the Bank of Japan Governor Kurado was giving a speech. At 2:15 in the UK, the Bank of England's Governor Carney will give a speech. At 3 o'clock in the US, IBD and TIPP economic optimism is released for January. And finally, at 8:15 in the States, the Fed's Lacker will speech. That's all for this morning's market update. Thank you and goodbye.